All right. So today, Patrick, very exciting. I think we did a session a couple of weeks ago when the big tech companies were reporting earnings. This session can be found within our guides. So if you guys want to look at it, if you click on swing model backtesting during earnings, you have the link to the video and also all the backtesting results right here. And we're going to go through a more extensive backtesting results today that you can also find under our products, swing trading model, and then the document from today would be here, swing trading model, October backtest. You get access to the file that we shared during the session, and you can also access the results and then obviously the video after the session. So we're going to go in details of what the swing model is. But before we do that, and also send us any question you might have. We're going to go through an exercise that is taking over a period of 4 weeks. So we started from October 10th, which is a Friday, to November 11th. So what we do here is over the weekend, we look at the swing model data coming from the last day of the week, so the Friday. We take the data and then we look at the bias of the model, we look at the levels, and then we create a strategy based on a series of baskets of companies. So today we're going to show you 3 baskets that we built. The basket number 1 has about 125 companies from different sectors. We have ETFs, we have indices, Max 7 technology, any sector that has large cap, mid cap, will be covering those 125 companies. Then we took a smaller basket of the Max 7, so Apple, Tesla, Google, Nvidia, Amazon, Meta, Microsoft, and then we did the third basket looking just at indices, so S&P, Nasdaq, VIX, QQQ, and SPY. And then within these baskets, we took 3 assumptions, or actually 2 assumptions. The first strategy is simply looking at the long-short equity strategy. So in this case, we go long at the Monday open. So we take the data from the Friday and over the weekend. So we have time to obviously put all the data together. And then the goal is really to go long at the open of the Monday if our bias is bullish, and go short at the open of the Monday if our bias is bearish. Then we don't do anything. We don't apply any stop loss, and we just want to see the results at the end of the week. So we close the trade at the end of Friday. So we take the Friday close, we close the trade, we calculate the results, we calculate the returns, and we see how these baskets have performed. This is strategy 1 for those who are stock traders, long options, long stock traders. And then we have strategy 2, which is very interesting, which is really using the model to sell credit spreads. So in this case, we use our upper band and lower band levels, and then we're going to show you what they are right now, to basically sell spreads. So if the bias is bullish, we would sell a put credit spreads at the Monday open, looking at the lower band level. If the bias is bearish, we would sell a call credit spreads at the Monday open, looking at the upper band level. And we're going to show you in a second what they are. And then we basically look at the next Friday expiration. So it's a 5 days model. So we look at the Friday weekly expiration for the spreads for our expirations. And then obviously we close the trade at the end of Friday. So here we will calculate if the price of Friday stays within the range or goes over the range. So if we have a win or a loss, because obviously at the end of Friday, the option would expire in the money or out of the money. All right. Let me know if you have questions, Patrick.
No, that's everything's good. Everything's good explained.